What's up, guys? It's Dan from Coin Bureau Trading. Today, we're going to take a look at the possibility that the crypto market could see a pretty sharp drop in the coming days, followed by a V-shaped recovery. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So starting off, guys, by addressing the elephant in the room, which is, of course, escalation in the Middle East. In case it wasn't clear enough, that's the catalyst that could potentially cause crypto to fall lower than expected in the next couple of days. And I'll explain why in just a second. What can follow is a V-shaped recovery. It's actually very similar to what we saw back in 2021. Not the conflict, but in terms of the price action. The main thing I need to mention here, though, is, of course, there are rumors, or I guess news, whatever, rumors, whatever you want to call them, going around that the US could get involved. And of course, that could result in significant escalation that could take all the markets lower. This brings me to what I believe is the most important chart that you need to be watching right now. It's not crypto, it's not stocks, it's oil. If oil prices are spiking, then that basically tells you that the conflict is escalating. And if oil prices are falling, then that means that the conflict is basically subsiding, regardless of what the headlines are saying. Of course, there's this notion that the markets are kind of, super efficient and like pricing things in. Of course, that's up for debate. But when it comes to oil, I do think that this is a pretty clear indicator of what's really going on with the conflict. As you can see here, oil is now pushing up on this long-term resistance trend line, which actually goes all the way back to April of 2024, which if I'm not mistaken, if memory serves, that's when we saw the initial exchange between Iran and Israel when they fired those missiles, and it was kind of like a nothing burger. It was very planned and kind of like, I don't want to say like coordinated and orchestrated, but they said, hey, we're going to do this on this day with this amount and like, stuff like that. Let's just say it was a lot more cordial than what's going on right now. But anyways, as you can see, basically over the last year, roughly speaking, we can see that oil has been basically gradually grinding lower. Every single time it hits this resistance trend line, it will get rejected and fall lower. Could the same thing happen again? Probably. And I'm sure most people are hoping that that's what we're going to see. But if we do see oil break above this level, then this could be basically a warning sign that the conflict is escalating. And basically, just by looking at the oil price, and if oil is spiking, you can basically guess that that everything else is going down, including crypto and stocks and whatever else. So again, the most important chart to watch right now is oil. And as you can see, it's basically on the brink of a breakout. And I think even if we zoom into the 4-hour, we can see like a potential either a double top or a bull flag, depending on on how you want to analyze things. That is potentially forming here. So, pretty spooky. You can see it's retested this level now 3 times. Maybe you could say it's a head and shoulders or whatever. But again, the point being is that oil is very close to a breakout, and that's pretty spooky because that suggests that, yes, there could be escalation. And again, with all this news around the US potentially getting involved, that seems to fit hand in glove with what we're potentially about to see in the oil price. With that being said, I want to take a look at the total crypto market cap, because what we're seeing now is actually pretty similar to what we saw in the second half of September of 2021. And what's really interesting is, of course, like back then there wasn't any like crazy conflict. But what's really interesting, guys, is that at the end of each quarter, basically you'll see something called the stock buyback blackout window. Kind of a mouthful there. But basically, a lot of the price action in stocks is driven by companies buying back their own stock, and they're not allowed to do that basically because of regulations at the end of each quarter, because they're going into earnings season and they can't kind of be seen as pumping up their stocks before earnings come in, if that makes any sense. And of course, at the end of September was the end of Q3 back in 2021, and the result was that we saw a pretty significant weakness in the markets, including in crypto. And if you actually look at the pattern here, just memorize this pattern for a second, because as you'll see, it's almost identical to what we're seeing right now, where at the beginning of the month you saw a nice rally, but then going into the middle and the second half of the month, as that blackout window came in, you saw crypto prices start to crash. They fell down actually by almost 20% during that period, which is pretty crazy. And then they saw this bounce at the end of September, and then at the beginning of October, they just started rallying, and they basically rally all the way up to the cycle top. Now, if we go all the way here to the current day, and by the way, we're on the daily chart. If we go now to the current day, we can see something very similar. Of course, we're now at the end of Q2, so similar idea. We're entering this stock buyback blackout window. And as you can see, like at the beginning of the month here in June, same thing. We saw a nice little rally, but now we're entering the second half of the month, and we're starting to see prices roll over. And we actually even have like a similar trend line, similar price action going on here, where you could see potentially the total crypto market cap drop drop here by, let's say, 5 or 10% in the next couple of days, see maybe a little bit of a bounce, and then fall even lower, just below 3 trillion, and then basically into the end of the month or at the beginning of July starts to recover. And again, it's not just because of the stock buyback blackout window, but also because of the possibility that we would see escalation, and then a resolution to that escalation potentially, or some kind of pause or ceasefire, going into the end of the month or early next month. As they say, history doesn't repeat, but it does rhyme, and I do think it's rhyming in this case. And again, the key takeaway being is that we could see a drop in the next couple of weeks, but then going into the end of the month, and at the beginning of July, starting to see basically what is a V-shaped recovery, because again, that's basically what we saw back here, that you can see, yes, there was a 20% drop over the course of 2 weeks, but then within like a week and a half, it was right back up to those levels before that dip, and it was just off to the all-time highs, off to the races. I think we're going to see the exact same thing in the coming weeks. But in the shorter term here, I guess I should mention that Bitcoin, we're looking at Bitcoin now on the 4-hour, we could see a rally back up, I don't know, to around 106K, so maybe another $500. Who knows, maybe this has already happened by the time you've seen this video, but we could see a rally back up to the Bollinger Band moving average on the 4-hour, and then at that point we could potentially see a rejection and then a continuation lower. We're seeing the same thing on Ethereum here, with the Bollinger Band moving average on the 4-hour being somewhere around $2,550. And again, it's the same thing on many altcoin charts, even the total crypto market cap, even others. All charts, basically, they fell below this kind of like short-term moving average. Now they're kind of like rallying back up to it, which is normal, like from a technical perspective. After you see a break below a level, it's normal to retest that level before rolling over. So we could see a retest of that level and then a continuation lower. And who knows, maybe it won't be the Iran-Israel conflict. It could even be the Fed potentially being a little bit more hawkish than people expect later today. I personally think that the Fed is going to be dovish in their forecast. And who knows, maybe that'll be the catalyst that takes markets a little bit higher here, by a couple percentage points to their respective Bollinger Band moving averages on the 4-hour. But at the same time, it could also be the catalyst that causes them to start rolling over. And then the Iran-Israel escalation comes in with like a 1-2 punch, to take the markets even lower than that. But again, assuming this drawdown happens, which is by no means guaranteed, then I do think we would get a pretty quick V-shaped recovery, and basically crypto prices would be back at levels they were earlier this month, either by the end of this month or by early next month, and it'll be clear to everyone that we're kind of back in recovery season. But before I go any further, guys, I do need to shill the Coin Bureau deals page here. We were using Binance, in case you didn't notice. We have a 20% trading fee discount and up to $600 of bonuses. It's the biggest deal that you can get on Binance. It's available exclusively through the Coin Bureau. Taking advantage of that deal is super simple. Just click the link in the description or down in the comments. It'll take you to a page that looks like this. Enter your email or phone number. It takes 2 minutes to sign up. Binance has every crypto you could possibly need. If you can't use Binance for whatever reason, do keep in mind that the Coin Bureau deals page does have deals for exchanges that are available to US users, available to users who can't access Binance for whatever reason. We have Arkham Exchange, we have 2bit, we have CoinCatch, we have a bunch of other exchanges there that you can check out, and it's completely free. These deals are completely free. You get a trading fee discount, the exchange gets a new user, and we get a cut of your trading fees. That's how we make our money, so it helps us out a lot when you use these links. So if you want to help yourself out, help out some exchange that you support here, and help us out, then do take advantage of those deals while they're still around. Anyways, before we wrap things up, guys, I do want to kind of underscore something that a lot of people have been missing, and that's that both JP Morgan and Coinbase have basically been meeting with the SEC to try and do more stuff around tokenized real world assets. And what's really interesting to me is that you can see, guys, that, because of all this uncertainty around Iran, Israel, and like the general kind of like risk off environment, but this kind of like disconnect when you have this bullish news coming out, but the prices are not responding because of some, people are distracted or there's some bearish macro catalyst. This tends to be, like not financial advice, but this tends to be a pretty good time to accumulate like, cryptos that are in this category. Just do keep in mind that, we could see another pretty big move lower, another 10 or 20% lower for many of these cryptos in the coming days. But again, just the fact that we're getting lots of developments around the RWA space and then no kind of like, response from RWA Cryptos, to me, like it's almost like a perfect sign. It's like, hey, like let's go shopping, let's see what we can get here. I'm already personally fully allocated to the RWA niche, so I'm not really too, antsy, let's say, about getting into it. But if you're someone who is like looking to get into tokenized RWAs or considering or trying to wonder, like which cryptos to buy, in my opinion, it's pretty simple. Just go to the RWA page here on DeFi Llama and then look at which chains are being chosen for tokenized RWAs. Spoiler alert, the number one chain is Ethereum, which is, not surprising. Ethereum is the most secure smart contract crypto. Everyone seems to forget that. But down here, yeah, it's looking really awesome. There's, some layer twos. You even see Aptos in there, which is interesting. So yeah, guys, do check out again the DeFi Llama on the RWA page. Just go through and see which chains these RWAs are on, and chances are these chains are all going to do well once all this uncertainty around the macro subsides, and the SEC issues some temporary exemptive order around DeFi or tokenized RWAs or whatever, and you start to see a massive rallies in these cryptos. Anyways, guys, if you did make it this far, then be sure to smash that like button, subscribe to the channel, ping that notification bell, and I'll see you in the next one.